This is Rod Kusin, Spooman for Risk for November 19th. It's Friday. We have our divergence strategy working here. We're looking for a short. We've got tons of retracement lines below the market. And the strategy started shorting that top here. And we really expect these retracement lines to get hit. Now, something that we've done that's new, if you've been following us, we've talked about the VIX retracement lines as well as, of course, the standard premium retracements. And what we've done is we've added to a single chart both VIX as well as ES INX retracements. So the magenta colored lines are based upon characteristics of the premium, whereas the cyan colored lines are characteristics of the VIX. So as you can see, we have a lot of retracement lines below the market. So we're expecting this to short, and this wouldn't be an unheard of time for a good short that would take us right into the close. Now, whether that will materialize, I don't know at this particular moment, but if these retracements are at all predictable, I would have to say the answer to that is yes. Here's the low of the morning right in here after 9 o'clock, and what we could see happen, I mean, it's really hard to tell right now, but number one, we could see a continual rally into the late afternoon, I would say, within about an hour of the close, completing a green day up pattern, after which it could tank, or we could have a yellow day pattern, which is forming right now, where we will see a low of the day in the last half hour. Whether that will form as of yet, I don't know, and I'm not going to be around to find out because I've got to cut out of here right around 12 o'clock Mountain Standard Time. But in any case, the interesting thing is to be able to combine, if you want, both the VIX as well as the ES INX retracements. Now, on one of the trend strategies, we got a long signal right in here. You can't really see it too well, but there it is. It's right there. And this is the only long signal that we've had using the trend. I'm a little bit surprised. We're trying our best to come up with the right settings on this thing, but it just seems like we're just not hitting it. Now, it could be due to the premium, and I just haven't had a chance to take a look. Why don't I do that now and just verify what the problem has been since about 9:30. Let's look at 9:30. Yeah, I can see the problem already. Yeah. All right. Here's the issue. And there's the issue. Okay. Since about 9:30, one of the primary conditions that we require in order for the trend to fire off is that the linear regression curve has to be less than fair value. So we've squeezed that up, and now you can see the linear regression curve has just never gone below fair value. Now that's typical of a good strong rally, and what you may have kind of an alternate, you'd have to trade this manually unless you arbitrarily change fair value. You could do that by adjusting fair value up. We would be in a position then to get the strategy to start pulling the trades. All we'd have to do is, well, we'd have to change fair value. We'd have to change our lower thresholds as well. But the other alternative to that is to just look for a good size spike down. Okay, for example, right here, you get a nice spike down. You can basically, just create your own, right about there. If the premium drops below there, just take a long trade. So you could take one here, you take one here, then right in here, these couple of places over here. Let's take a look at what would happen if you were to have done that. So here, as you can see, as the premium dropped down, this would have been a good time to take a long trade. Then here, that's not so good. That's not so good. And then right in here, yeah, that looks good. Right in here. We got to move down here, but we're already pretty close to the top of that move. So then down right in here, there's where the premium tanked, so just a little bit after that. And then it looks like we're already in the short, so really now would be the time to be cautious about taking a long trade. But that's the idea, that's the concept. Now, as it looks like we are in a short here, you can see just as this the premium just moves up above our upper threshold, and pardon me, I'm sorry, that's not the upper threshold. I just moved that line, unfortunately. Let me recalculate that. Okay, there we have it. Upper threshold was at 132, and our margin of error another 0.15 above that. Brings us right in here, and that would meet our requirements right here for a short. So that looks good. So that's the way it's supposed to work. Then we can add to that the overbought, oversold on say a 3-tick large contract. That makes for a good, highly predictable opportunity to short the market. Okay, so we've run out of time. I've got to get going, so we're going to complete this brief video. We're looking for a good, nice short here to fill these retracement lines. We've got a good, probably, let's look at what we've got here. Well, just to the premium retracements down to 88.50. So there's a 7-point drop just from where we last were. I do believe we're going to see that materialize. So we wish you all a good weekend, and we'll be back online on Monday. This is Rod Goosen and Spooman for Risk.